Hey traders, welcome to Charts and Coffee. Hope everyone's having a good morning so far. Happy Monday to everybody. All right, welcome as we make our way through May. Looking at this kind of interesting window between what the Federal Reserve is going to do next in terms of the June meeting, which is really only 3 weeks away now. If we take a look at the Fed probability. Oh, yeah. So June 14, so about 3 weeks away. And then, of course, in between all that, as if waiting on the Federal Reserve to make a decision about what they're going to do with rates, whether that's a pause or a potential hike. Notice that hike column, which is the 525 to 550 column you see to the right, that short column, that is the possibility for 18.5% likelihood of a quarter point hike, while 81.5% whopping overwhelming likelihood for the hold. But that hike conversation's still there, which means it's still going to be discussed. And that's where we go going into that. That's where we are going into that June 14 meeting. And then, of course, the debt ceiling narrative will continue. The debt ceiling narrative is really interestingly most visible in the shorter end of the yield curve, which is still pretty interesting. You don't see it play out. Well, frankly, when you take a look at the yield curve, whether that be the short end, 2-year, 10-year, 30-year, none of the yields are going down, which is to say none of those charts, ZT, ZN, ZB, are generally moving higher, which would indicate lower yields, which would reflect a dovish central bank come the second half of the year. So lots of push-pull going on, lots of push-pull, lots of confusion still in terms of what is coming up next. All right, so then we move on to a look. And if you have any questions, gang, feel free to type them in, and we'll take them first come, first serve. Good morning, good morning. Okay, so if I take a look at let's move on over to the 6E. As long as we're talking about the Federal Reserve, we have to talk a little bit about the European Central Bank. Now, the European Central Bank is still very much in their hike mode. So a lot of folks are asking me, Rog, is this a short in the euro and a buy in the dollar? And my answer is no. And the setup says no. If you take a look, we have an oversold slow stochastic in a neutral environment, and we're really close to the support of the daily price movement range, our volatility-based support zone there in gray. Ultimately, what I'd like to see for a confirmation of follow through higher is a break of the 108.50 level on the euro. A break of that would indicate that the US dollar is ready to come back down. The euro is going to head back up. And that's a topic that I covered in this week in the market. So for those of you that have that newsletter, if you're part of the Sector Secrets Mastery or are a subscriber, you'll check out that discussion in This Week in the Markets, as well as the levels that I'm looking at. And if you want to check out a trial, $7, join me for a month, 4 videos, 4 reports, $7 this week at themarkets.com. All right, so then we can jump on over to the S&P. A lot of chop. One of the things that I think this was a question that I got in, last night's This Week in the Markets live show, which was, I keep hearing about crashes. The crash narrative is really attached to the narrative of the debt ceiling crisis. And it is an issue that's a near-term issue. Until that's solved, there's always going to be looming over our heads the possibility of a default, right? And if default is something we're concerned about, then obviously, yes, we could see a precipitous drop. But remember, when we're talking about quote unquote a crash, and whatever hyperbole that you'll see out there in the financial media, that's usually a 20% sell-off from the highs. A 20% sell-off from the highs is typically considered a crash. Now, why 20% and not 22.79? Again, the wonderful randomness with which we put certain measuring sticks on the on the market, and we say, okay, well, this is what this means. Is 19% not just as awful? I think so, but it's not a crash because it's not 20, right? So keep that in mind when you start hearing all the talking out there. If there's anything that's going to keep the S&P from not heading higher, and we got a question here, Johnson and Johnson. Yeah, JR, I'm sorry. Good morning, JR. Kelvin. Yeah, I love the question on Johnson and Johnson because what it brings up is what are the pieces of the broader averages? What are the pieces of them? In other words, if the S&P is going to keep moving higher, obviously XLK has got to keep moving higher. Apple has to keep moving higher. Microsoft. Why that trio? Sector, think of it as the tide. Individual stocks, think of them as the boats. So if we make our way to healthcare, to your question there, Kelvin, if we make our way down to healthcare, what does that tell us about the S&P and the Dow, by the way, my friend? That tells us that for S&P to keep moving higher, XLV has to keep moving higher. And then your question on Johnson and Johnson. So we need to get to the stock last. So if you saw the process, that's the thinking. We start at the index level, and we move down to the sector level, and we finally get to the stock. And then what do I think of J&J? I can only have an opinion of Johnson & Johnson within the context of what the index and the sector are doing. Now, for what it's doing, it is arguably oversold. It is in a neutral market trend. It is also below the 200 propulsion. The 200 propulsion, by the way, gang, is a combination of a slow. Here we go. Those of you that have been using this for years, we've had this available since I think 2016. It's a slow EMA and it's a fast EMA, right? So the slow EMA, and that's pretty typical of any kind of moving average cross, right? The slow EMA in the case of the propulsion is an 8, or sorry, is a 200, 200, and the fast is an 8. So it's the 8 EMA interacting with the 200. And then the secret sauce, if there is any, is a free indicator, by the way, is price. How does it interact with price? And in this case, you'll see it's turned on. That means all the criteria, 208 price, have been met. Check, check, check. Dots turn on. Think of it as a smarter self-correcting exponential moving average. We are below it, which means we're on the bearish hemisphere. We're on the bearish side of sentiment when it comes to this symbol, right? And ultimately, that means I'd prefer, frankly, to be a short seller, but I don't have a downtrend. So I can be really looking at both ends. I could be looking at the support of the DPMR and the resistance of the DPMR. And then in CHOP, especially in a sort of market like this that isn't trending, keep your time horizon about 1 to 3 days. And that's the way I would handle Johnson & Johnson. Again, slightly bearish bias because the XLV is really not strong. UNH, the number one weighted stock, is not strong. And that is going to affect Johnson & Johnson. But it does have the ability to bounce up towards a 200. So it's not just shorts, but really limited upside when we buy. All right. Thanks for the question, Calvin. Next up, question is TLT a long-term buy? All right, let's talk about what long-term would mean to different groups of traders. Long-term is, for me, weekly or daily. And long-term really for me is usually going to be weekly, right? So if I start thinking about something long-term, probably the best way to think about it is what's my minimum expected time to hold the position. On a weekly, it's 6 months. On a daily, it's a few days, right? So if I'm thinking long-term, I'm usually going to make my way over to the weekly. And then let's pull up TLT on the weekly. Now, to trade TLT or even to invest in TLT or to put on a position trade in TLT, frankly, I will use the ZB futures, Jay. And what that means is TLT is going to move pretty much however ZB is moving. However, I don't want to deal with contract rollover by a longer term futures position. So TLT shares are perfect. It is neutral. I'm not at a point where I'm comfortable buying yet. However, if there are levels of support, I would focus on the week of 227, February 27, the 98.88 low, And then I would also focus on this Darvis low, the week of 10/24, put in that 91.85. In that zone, I would be fine building a position on the weekly with a stop slightly below the Darvis. Because if that Darvis doesn't hold, the justification for that bouncing off those floors aren't there. But that would be the zone that I would think of. And as long as we can meet that criteria, and I bought shares, not a depreciating asset like an option, I can just hang on to it. And that's the way I like to set it up on the weekly. Now, if you're thinking, well, Rog, long-term to me is a daily, right? Some folks say, well, Rog, gosh, long-term to me was a 4-hour chart. Again, always making sure we understand there's a lot of subjectivity with time frames and time horizons. When it comes to, now this could be interesting. So what I've switched on over to, got a weekly, we went from the weekly to the daily, all right? And this daily has an anchored VWAP at the beginning of this year. Take a look at the times we bottomed out. That's really interesting. The last time we bottomed out on the V score was a negative 2.3 standard deviation, a negative 2.3. If we can get down there again, that could be really interesting. Anywhere, frankly, between a negative 2.0 and a 2.3. Right now, we sit at a negative 1.8, basically. So if we can get down to a negative 2 or a negative 2.3 standard deviation on the V score, which is a study that uses the volume weighted average price, the VWAP, that could be a really interesting entry on the daily. And if you're wondering where that would put you from a price perspective, now these lines that I have here on the screen, aside from the Darvis 2.0, a negative 2 standard deviation would put us, let's see here. Yeah, not too far from where we are right now. It's pretty close to 100.5. So we'll continue to watch that one. But on a daily or a weekly, there are zones that are looking more appealing than they have in a while for a long position. I'm with you there. All right, next up. And by the way, for those of you that, really great segue from either This Week in the Markets Live or Charts and Coffee into, say, the next stage of what I do in the markets would be checking out This Week in the Markets. It's a report that I put out every Sunday. It starts Friday. So on Friday, you get a video from me. On Sunday, you get the actual report, which runs anywhere from 10 to 11, 12 pages. Sometimes if I really get into a particular topic, we might push out to 16, 17 pages. So if you like a really good, thorough read that you can print out, or if you want and keep with you throughout the week, to sort of to guide you throughout the week as to where to look and what's possibly going to be in play, check out This Week in the Markets at thisweekinthemarkets.com or whatever this URL is. That's a terrible URL. I'll be honest. That's terrible. Who's going to remember that? Nobody. If you head on over to www.thisweekinthemarkets.com, you can check out the $7 trial. All right. Moving on. Let's, and since I broke down TLT, my futures traders out there, let's talk about ZB. All right, let's talk about ZB. Can you play ZB? You can. Why am I emphasizing TLT? Because TLT is going to not put you in a window of having to roll every quarter when we go from the M contract for June to the U contract for September to the Z contract for December, right? Your eyes already glazed over. Oh my gosh, Rog, I got to do what? Exactly. So this way, all you've got to do is just buy the shares in TLT. I don't do leaps. I know some folks ask, what about leaps, Rog? I don't do leaps as often as I used to. Now I'll just play the underlying shares and put that in a portfolio. By the way, ZB this morning, moving lower. And if you want to take a look at just, again, kind of maybe an interesting barometer to debt ceiling concerns, keep an eye on ZT. Heck, I even talked about the 1 month. I even talked about the 1 month government bond, because that 1 month government bond and the 3 month government bond have been also going higher in yield as we're concerned about, again, how it is that this debt ceiling saga finally comes to an end. So that's been something in play as well. All right, let's see what else we have here. Either everyone's caffeine has not kicked in today, and I'm the only one super caffeinated. All right, what other questions do we have here, gang? I think maybe I've caught up. I could be wrong. Let's jump on over to, um, hey there, Benny Bear. If you joined Simpler Trading, do you have access to all the traders? No, Benny Bear, we don't have a single service that gives you access to all of our traders. No. And frankly, I will tell you, just from feedback from other traders, that's not necessarily what you want to do. I would say pick an asset class. So if you're interested in futures, you'll be able to work with our futures traders. If you're interested in options, you'll be able to work with our options traders. And if you want the specificity of a certain style and of a certain asset class of a certain trader, we have masteries. So we have lots of different ways where you can get very specific about what it is you want out of the market. If you want to day trade, we have, again, certain rooms that favor day trading at certain times of day. So I think the best thing to do is ask yourself, what is it that I want to accomplish in the market? Do I want to be an options trader, futures trader, short-term trader, long-term trader? And then there is a path for that in Simpler, because I think that the specificity will absolutely help, rather than lots of different ideas and lots of different asset classes and lots of different indicators. It can be kind of overwhelming. All right. Can we take a look at V on the daily? Sure. Hey there, editor. Good to see you. Visa is, along with MasterCard and JP Morgan, Visa is one of the symbols that has been pretty strong in the XLF, right? XLF has been hit hard by, obviously, the regional banking crisis, which it almost was completely, it was almost an irrelevant narrative for big banks. And yet, every time there's a negative bit of news for regional banks, it seems to have that contagion effect out of the KRE spilling into the XLF. In terms of the two ETFs we look at, KRE meaning the regional bank ETF, XLF meaning the big bank ETF. And so when I take a look at what's happening with Visa, I probably borderline prefer MasterCard. But that said, editor, I would absolutely be a buyer of the DPMR support level like we saw on the 10th of May, and just have a very limited upside expectation, because we are in chop. Now, if we're in a trend like MasterCard is, if we're in a trend, very different expectation. Buy the dip, look for new highs. The difference between buying a choppy market is that we're likely to hit resistance and it's likely to be respected. In the contrast between chop buys and trend buys is that in a trend, the likelihood of hitting higher highs and continuing to move higher is, again, more probable. So I would say if you're looking at Visa, why not take a look at MasterCard as well? All right, last question. Oh, second to last question of the morning. Thank you, Mark. How are you? GLD neutral on the daily, slow shows higher. I'll tell you what, Mark, gold has been tough, but I am bullish. I am bullish at where we sit right now. So take a look at GC. Daily price movement range. I frankly really could have thought about a position on Thursday or Friday. Why didn't I? We had about every Fed speaker possible talking last week, sometimes twice. Let's get this out of the way. Then we can refocus on GLD, TLT, 6E, dollar, things like that this week with a lot of those Fed members out of the way. Joke's on me, though, because I think we have 4 Fed members speaking today alone. Sacre bleu. That is the reality. So be careful, but I would be a buyer. In the daily price movement range on GC, that would start around the 1962, 1963 area. And then once gold reaches that level, we can open the door to GLD, right? Fantastic. All right. Last question of the morning. 30-day trial this week. Does it cover the ES futures? There is a section on the S&P futures. Yes, Garrick, but here's what I would also remind you. Remember, we put this out once a week, so it's a daily time frame look. We'll look at flows. We'll look at relative performance, watch lists. What are the market movers for the week? Things of that nature. But yes, not only does it cover ES futures, it's also going to cover oftentimes the sectors that are going to affect the ES futures, that index sector stock approach that I teach. So thank you for the question. Great place to wrap it up. As always, gang, thank you so much for being here for Charts and Coffee. I'll see you tomorrow, same time, same station.